So this week, we know that all the attention has been really focused on the non-farm payrolls that is due out today, and also the conclusion between the President Donald Trump and President Xi Jinping's meeting at the end of the week. But certainly, we do know that despite the consolidation in most markets, there have been a brief disruption seen in the middle of the week. So certainly, the ADP private payrolls number came in surprising on the upside and has caused many of the analysts to shift their expectation outwards for the NFP data that is due today. But on Wednesday, that gain had really been erased after the Fed minutes came out, where the Fed actually showed the consideration of the shrinking of their balance sheet before the end of the year. So as things stand right now, we do see that the most markets been in consolidation, but Friday has certainly brought about another disruption. So the US ordering of the striking in Syria has created quite a bit of reaction in the markets. Certainly there have been a lot of escape towards the safe haven, and we can see that the dollar yen itself had really slipped to trade just above 110 briefly this morning. US Treasuries was briefly down to 2.3% support, and gold prices up above 1260. So I think there's this general shift towards the safe havens within the markets. But that said, the attention could really be tuned back after this initial reaction with the data, the NFP, and the conclusion of the meeting due in the US session today. But as things stand right now, we want to look ahead to what are some of the items that we want to look for in the following week. And first and foremost, we do have the G7 meeting, and things coming out from the US remain an interest. But that said, I will say that US right now is really the epicenter in terms of the market movements. And I think for the upcoming week, especially for those trading dollar pairs, you'll find it very interesting to see the retail sales and also the consumer prices data coming through. So the retail sales have really been formulating expectations for many of the consumer sectors, and for the current release, the market is expecting a moderate improvement. So I think that could really keep the current US indices in a state of consolidation. But that said, do note that next week is really when we do see that US earnings season kicking off, and on Thursday, for those interested in the financial sector, Citibank and JP Morgan Chase are expected to release their earning release. And as we do know in the market sentiment right now, fourth quarter earnings are expected to broadly improve. So that's going to be really interesting to see whether the US indices has another leg up over there. So moving back to Asian markets, we want to see what are some of the key indicators, and I will zoom the attention to China. Besides the loan condition that may be out anytime in the week, we do have China's trade balances coming through as well, and the market is currently expecting the number to improve from the previous one. So in US dollar terms, the Bloomberg market consensus currently sits at 3.8% year on year as compared to the previous decline, and I think that could actually provide a boost for the Asian markets over here. But we do note that producer prices will be out sometime in the week as well, and I think for the markets, that number has been a concern for whether the Chinese central bank may actually resort to tightening. And as things stand right now, the market is expecting a slight moderation in producer prices, so I think that may not cause as much concern. But that's it, zooming very close to the local region, and what's the scene is seen here is that next Thursday we also see Singapore's first quarter GDP. Now we do know the previous quarter, the Q4 2016 GDP had actually surprised significantly on the upside, and that had actually helped the Singapore markets to really gain in the region. So I think the upcoming figure is going to play quite a huge importance in the local markets as well. So as we do know that Singapore's benchmark index, the Straits Times index, have been pushing at 3190 and seeing this barrier at 3200. And I think whether this number is going to come out is really going to see whether the index will be able to break significantly above. And for those who wants to trade the movements on the Straits Times index, the Singapore index is correlated with the STI on the IG platform, and that will be the thing that you want to look for.